In this video, I'll show the strategy I used to make my first $100,000. And until the end, you understand exactly how it works and how you can use it to make your first 100K in less than 1 year. My name is Paulo Teodoro. I've been a forex trader for 7 years, and after losing money for 3 years, I found the only way that I could make money with the market, which is financial flow, or my trading system, the hidden dominance. That is a method I developed based on absorption. So before we go on the charts and I show you how my strategy works, I need you to understand a very important point. And without understanding this point, you will never be able to be consistently profitable in the market. So what you really have to understand is that you need to have a bias. Most of traders just react to the market movements. In this way, the market just catches them into traps. I'm talking about this because I'll teach you how to identify absorption in the market. And many times the market is, for example, dropping, but there's a hedge fund or bank buying a lot, and the bearish movement will reverse soon. So instead of selling on a weak trend, you have to wait for the opportunity to buy and take the whole movement. And I will teach you this right now. First of all, you have to understand that if you want to make flow analysis or volume analysis, use this analysis to trade, you need to have access to the future market. Why? Because forex is a decentralized market. You don't have these informations. You don't have the volume informations. You don't have the orders information. You just have the information from your broker. And you take this, for example, volume tick. Okay, we know that forex has volume tick, but this information you can get from your broker, and is actually different. If you check from each broker, it's different because it's not centralized. It's a market that you don't have access to these informations. So if you want to make a accurate analysis about USD JPY, you cannot go to forex. You have to analyze this in the future market. For example, here we are on the JPY futures. So JPY futures, Euro futures, GBP futures, they are all in the CME stock exchange. So there you can get these informations. You can get all the orders, like who bought. You can see the volume, how many contracts. You can see all the informations concerning volume. Okay? This is very, very, very important because many people, they just trade forex looking at sometimes the volume that the broker provides to them, or not even this. Like they use moving average, they use technical analysis, but for short-term trading it doesn't work. For short-term trading, candlestick pattern, moving average, technical analysis doesn't work for short-term. It does work for long-term, mainly in stocks, okay? For forex, not so much, but it works too for forex long-term. But for short-term, you cannot make money with this because the only thing that you can predict and really make money in the short term, mainly forex, it's the flow. Okay, you have to understand when these big players are buying and when they are selling, and you have to try to be on their side. Okay, actually the side of the strongest of them, because there are a lot of banks here, and you have to be on the side of the strongest. So it's very important that you have access to the future market to make this analysis, okay? The volume analysis. This was the first point I wanted to talk to you. And now you have to, I have to explain two indicators. These two indicators here on the screen, you can see. The first one is delta, and the second is CVD. CVD is just cumulative volume delta. What is the difference between them? Let me first explain delta. What is delta? Delta is you understand it's very simple. It's the difference between the buy side aggression and the sell side aggression. What is aggression? Aggression is when some player buy the market at the market price or sell the market at the market price. You have two ways to open a trade. Okay? You either place your order on some price and your order goes to the book, or you just hit the button to buy at the market price. So you're being aggressive if you hit the bottom buy at the market price or sell at the market price. This is being aggressive. It shows you're being urgent to open your trade. Okay, this is the explanation. You're buying the market, you're selling the market with urgency. Okay, and delta basically measure this. Delta will measure the difference between buy side aggression and sell side aggression. Okay, very simple. CVD, it's the same thing, but CVD will take the whole period. So during a certain period, you can see on the CVD who was more aggressive, the buy side or the sell side. Okay. Since you understand this, now let me explain this movement on the JPY. In the case USD JPY goes down and JPY futures go up. Okay, that's the difference between them. This is the only difference. Okay, so JPY futures was going up. You can see this bullish swing right here. And look to the delta, to the CVD, okay, cumulative delta. If you check here the delta, the CVD, it's going down. What does it mean? Don't think of divergence, please. Don't think of divergence. Divergence is some lazy way to analyze the market. People use this a lot for RSI, people use this a lot for stochastic. It's just some lazy way to analyze the market. I don't want you to look at the market and see, okay, the price is going up and the CVD is going down, so it's a divergence. No, don't read the market this way. You have to understand here that the price is going up, and if the CVD is going down at the same time, it means that there is some player absorbing the movement, okay? There is some playing, selling while the market is going up. So don't look as a divergence. Look at this as an absorption. You have to understand this concept, because once you understand this, you'll not look for sells. Okay, you'll not open sell positions here. You will understand if you know, okay, there's some player absorbing this movement. It means that the market will reverse at that time? No, because the player is selling and wants to sell more. So he doesn't want to stop the movement right there. So the market can continue going up, but you already know that your opportunity is on the sell side, but you need to wait for the opportunity. Okay, you already have a bias. We're already talking about this. You already have a bias. So when you see this absorption, you have a bias to think, okay, now I will sell. Okay, let's continue here. So the market was going up and some player was absorbing this movement. You can see some player being very aggressive here, selling a lot. Then the market goes down a little bit and then it continues coming up. And you see that the CVD continues going down. Look, the CVD went a little bit up here and then boom, in this last swing. This last swing is actually price acceleration. It's some interesting pattern that I see in the end of movements, but we are not talking about this right now. Okay, let's just focus on the CVD and delta that you understand. I actually use also volume, okay, the simple volume indicator. It's very important, but I didn't want to put it here because it would have too much indicators on the chart. but through just these two indicators you understand how this strategy works, how you can understand, how you can read absorption on the market. Okay, so the market was going up and some player was absorbing, and you can see here, okay, you can see that the market after this went down, and now the market is absorbing, buying a lot, and soon the market will go up. Oh, let me come here to the real-time market. Okay, on the real-time market you can see again absorption, and the market will go up soon, but it's not timing. Okay, so there was an absorption and the market went down after this. Okay, that's pretty easy to say because this is already past. It already happened. So it's easy to say what already happened. The point is, okay, I have a bias. I know that there is an absorption happening. So where should I place my trade? Where exactly should I place my trade so that I can make money with this? And that's the point I want to show you now. Okay, so now I'll show you the signs that the market, this bullish trend, for example, is getting very weak. You already know that there's an absorption and you're just waiting for an opportunity to sell. And what is the sign you need to take your trade on the sell side here? So for example, if you see that the market here is going up, you had this bearish movement. You don't see any important structure broken. Okay, so this is the first point I want to talk. It's some important structure broken. The market has to break some important structure. Here, you don't see any important structure being broken. Okay, you don't see. Then the market continues going up. Here, you see right on this bottom, okay, right here, you can see that the market, maybe it broke a little bit this bottom, but you cannot say, oh, this structure was broken. And this was not like a very, very important structure, but still, it was some structure. And also the movement the market makes here. Look, it's so weird. It's just a range. You know, you don't see any power from the sell side here. Look, this is just a range. This is not what we want as a break of structure. Okay? So it didn't happen here also. But here, on this level, you can see that the market came with this strong movement, this strong bearish movement. Okay, let me making too much drawings here. So the market came with this strong bearish movement right here. Pa. It had some reaccumulation and then it broke the structure. Okay, so this structure was broken, even though you had some little range here. The beginning of the movement was strong. So this is the first point. You need a break of structure with some movement. Doesn't need to be very strong movement, but at least you have to see in the beginning of the movement some power. Okay, some power that they want, the sell side wants to break this structure. Okay, so the first point, break of structure. And what is the second point? If you see, in the end of this movement, the sell side absorbed really a lot. You can see how they absorbed a lot on this level. But still, this is not a sign. Okay, this is not a sign. But here you have the sign. When the CVD is not going up or going down anymore, you can see it just stays on this level. It just stays on this level. And then it starts to go up on this level right here. So the point is, how I can exactly identify my entry point for this trade. You need to first of all have a break of structure, and second of all, you have to see the CVD, weak CVD. What is weak CVD? You don't see anymore the sell side being too aggressive, because the sell side doesn't need to be too aggressive anymore. So what is the meaning of absorption? Basically, let's take this example, okay? Some player is buying a lot, and some player is selling. And there is a point where this player that is buying doesn't have money anymore. The money is over, or the contracts this bank had to buy is over. He cannot buy more contracts. So now the player who was absorbing the movement from the sell side can make the movement freely, because the buy side doesn't have contracts anymore. And this is the meaning of absorption. This player was absorbed and cannot move the market anymore. This player is weak, and now the sell side can make the movement, can freely make the movement. Okay, so when you look now, after this break of structure that happened here on JPY, it's technically an important structure here. This is even more important, of course, but this is also some important structure. And this structure was broken with a strong movement. Okay, this is a strong movement. This is clearly a strong movement. You need this strong movement, because if the market comes like here as a range to break the structure, it didn't break the structure, but if it comes here like this and doesn't break, and comes like here and break like this, it's very suspicious. Okay, you cannot see real power on this. So it's very risky to take this kind of trades. You have to see the power of the swing that is breaking the structure, the first point, and also the CVD cannot be like up or down, must stay on the same level, must keep on the same level. And now you have to check on the price, okay, an opportunity. For example, the market broke the structure here, came down, and now the price is very weakly going up. Okay, you can see here on the candles, very small candles, very weak candles, and then the price goes down. Of course, this was a news. I think it was payroll, if I'm not wrong. I think it was payroll, this news, or CPI, I don't remember. But this news, of course, made this big movement. But before this, there was already an absorption. Okay, it didn't move because of the news. These big players, they know about the news much before the news. Okay, when the news are released, they already know the result, and they take their trades and they build their portfolio, they make their positions based on this. Okay, don't think they know at the same time you. No, they don't know at the same time you know. They know much before. Okay. So after you take your trade, for example, on this level here, okay, or even this level, you can put your stop loss like here or here on this top, and then you see the movement. Okay, of course, it's easy to say later. I could show you how much you could have in return, a lot of things on this big movement. But this is not what I want to show you, right? Because it's very easy to say after it happened. It's very easy to say after it happened. But the point is, you have to understand how you would get in this trade, and also you have to understand now where you should safely leave this trade. Okay, how I do. Okay, after I open my trade on this level here, I place my take profit in the beginning of the absorption. Where is the beginning of the absorption? You see that during this bullish movement, this bullish trend, the player was selling a lot, was selling during this whole movement. So in the beginning of this absorption is where I place my take profit. For example, right here, okay? Right here on this level. Let me make some, let me show you how much it would be in risk return. I usually put like here in these areas. I don't like to put on the top. Like here for me is good for me. I would place like here, okay? This is how I do. I'm just showing. You can do the way you want, okay? I'm just showing how I do. Because on the top, it doesn't make sense like the price comes here to the top if here is already weak, you know. So this is what I think, and on the top there's just some acceleration for stop hunting and doesn't reach the price I want. This is also bad for my risk management, so I don't like. So for example here at this level would be something around 6 times 6.5 risk return. So I risk 1 and I have in return 6.5. okay, this is where I would plot my take profit. Of course the market continued going down, went down a lot, and here is about to reverse. Okay, you can check this later to see if I'm wrong or not. This movement here is being absorbed and I'm waiting for my opportunity to buy. Okay, this movement is being absorbed and the market soon will go up, but I'm waiting for an opportunity. I didn't place my trade yet because even though I see that the delta is getting better here, I don't see very strong movement up. There was a strong movement, but the market broke down this bottom, and this is not something I usually like to trade. Okay, so I'm waiting a little bit more, but later you can check. Okay, so just so that you can check in the forex market, this was a bearish movement in the forex market. Then the forex, the USD JPY, started to go up on this very long trend, and now it goes down again. Okay, it goes up here, goes down on USD JPY. I'm not saying it's going to be exactly now, but it's very soon to this movement. Okay. I'll show you one more example so that you can really understand how to predict the market movements using absorption. But before, I just want to ask you to hit the like button if you like this video, if you like this strategy, because this really helps me. And if you think this content is relevant for you and think that I can help you to succeed in your journey as a trader, please consider to subscribe. I do a live stream every Sunday evening at 9 p.m. where I analyze the past week and share with you what to expect for the next week. I know that my English is a little bit broken, but I think you can understand, and I do have a lot of knowledge to share. Now, come with me. Okay, so now we are on the CHF futures. It's exactly the same as USD JPYs. It's opposite, okay? So it's USD CHF in the forex, and here CHF futures. So if it here goes down, there it goes up, okay? On the USD CHF, it goes up. Okay, again, I already explained everything, so now it's going to be pretty easier. Here on the CHF futures, the market was coming down, okay? You have this bearish movement right here, this bearish movement, and there was a player absorbing the movement. Again, don't think of divergence, okay? Think of absorption. This way you can avoid some setups in your mind. This is not some kind of setup. This is really reading and understanding the market. What the market is telling you, what is happening, okay? It's not a setup, okay? You can place a stop loss the way you want. You can place the take profit the way you want. I showed you how I like to do. You can do as you wish. I'm just showing you how you find the right timing, how you understand the absorption, right? So don't think this as a divergence, as absorption. Always, I will say this. I'm repeating because I know that you guys are programmed with these setups in your mind, but this is not how it works. Okay, this is, you have to really read and understand the market. Okay, so the market was dropping here, and some player was being very aggressive from the sell side and buying a lot, was taking orders from the book, and buying, and the market was going down. It was going down, and here again, look what happened here. Bah! A strong bullish movement. If you check this trend, do you see some structure being broken? This is not structure being broken, right? Because if you look here, this is the swing. This is the bearish swing. There is no structure here. It's not some structure that was made on this swing. This is not anything being broken, and it was not even strong. So look at this trend. Okay. Where was the only moment where the market broke the structure? Here is the only moment where the market broke a structure with a very strong bullish movement. Very strong bullish movement. Okay, so we already have the actually 2 points, right? So the first point, there is a player absorbing the movement. We don't trade break of structure. It's not, oh, it was a bearish trend, so there was a strong bullish movement and this happened. No, we don't trade like this. We first understand there is an absorption. There is some player buying a lot. It's not interested to buy. It's buying a lot. It's building a lot of buy positions. And it's accumulating a lot of buy positions. And now, this movement happened when the price came up very strongly and broke these structures. Okay? And now, what do we need? CVD. CVD. In here, I want to explain one more example of how you can trade based on the CVD. I showed you, that's why I chose this example. You will just understand how to find the exact moment when you practice. You have to practice this. You have to trade, right? It's a skin in the game. Skin on the game. You have to trade this, and then you will learn how to do it. You'll not be professional after watching this video. Okay, you have to really practice this. You have to see this happening and understand when is the movement, is the timing. Okay, but here I'm already explaining most of cases that happens. This is another case. You already have absorption. You have break of structure, and now look what is happening. This case is very interesting. I think here it goes up from here. Why is this case so interesting? The CVD was, the buyers were being very aggressive here, and you can see this from the CVD. This movement was completely absorbed, and now at this level, the sell side, let me make it again so that it's more beautiful. From this level, oh no, not green. So from this level, the sell side started to be more aggressive here. Can you see what is happening? The sell side was being very, very aggressive. But what happened? The market was not moving. exactly here, when they started to be more aggressive, the market made this movement. The buyers showed, I'm controlling this market. I have more power. And then the sellers started to be very aggressive here. They were selling a lot. They were hitting the sell bottom, selling at the market price, trying to make the price goes down, but it was not enough. You can see here this on the CVD. Okay, they were very aggressive, but the buyers were not being aggressive anymore. At this moment, the buyers were keeping the market on the same level with limit orders. Okay, this is something that you take with experience, but I'm already showing you two cases that you can apply this strategy and make money. All right, so this is not the case where the sellers just don't have money anymore and the market goes freely. In this case specifically, you see that the sellers are trying still to push the market down, but they were not able anymore. After this whole absorption from the sell side, from the buy side absorbed. Now the sell side is trying to push the market down, being very aggressive, but the market is just not moving. Okay, not moving. You can see here, and then the price goes up. This kind of movement is very interesting. Why? Because different from the previous example, I usually place a much further take profit, because at this level the sellers are putting a lot of pressure to push the market down. You can see here at this level the sellers are pushing the market down. They are trying to push the market down, but they couldn't. So when the market goes up, they have to hit the stop loss. And what is the stop loss of a buy position, of a sell position? It's basically a buy position, right? They have to close their positions. So they sold, now they have to buy again. And this makes a very strong movement. And you can see here how much the market went up. I would imagine the market would go this much up. No, okay, I will not say, oh, you will buy right here. I will not tell you, oh, you buy right here at this level, and you see how much you could take. Oh, you could come into this level right here and make 1 to 20, 1 to 15. I'll not say this because this is not the reality, okay? You'll probably not take the whole movement, but at least until the market breaks the stop, okay? Normally I would put here where was the beginning of the buyer's absorption, but since it happened, I could put a little bit more, like when it breaks here, or I can try to take a little bit further. But I'm saying you not take the whole movement, but it doesn't matter. Okay, I'm just showing here what happens after this absorption occurs on the chart. Okay, so this is a very powerful strategy that you can use to make money. You have to be patient. This this opportunity doesn't happen all the time. So you have to be patient. You have to see, oh, first of all, okay, I was seeing here, there was happening an absorption. I actually took a trade right here when it broke this area. Okay, but I didn't take all this swing, of course. It's some things that you cannot know. Okay, you cannot know where it goes to. But I know why I took my trade, and I know why it went well, why I could be profitable on this trade. Okay. So what else should you talk about? This strategy doesn't happen all the time. You have to be patient. You have to wait to see when this strategy will happen. But once you can see that there is an absorption happening, on the movement, it's already beginning, okay? You see that there is an absorption happening. What do? You wait, you don't buy, okay? Oh, there was an absorption happening already here. Do you buy? No, the market was going down a lot. If you're a bank, it's okay, you can just buy more and more and more and more. But you're not a bank. You have a stop loss. I hope so. I hope you have a stop loss, please. Otherwise, soon your account will be blown, okay? You'll blow your account. So, wait, okay? Wait, be patient, wait for the break of structure, strong movement. This is important in all of the cases. This is a different delta case, CVD case, when the sell side was trying to sell a lot. But don't forget about this very strong movement breaking the structure after the absorption. Okay? If you trade this, if you apply this, I'm pretty sure you'll make money in the market. I'm pretty sure. A good strategy is essential if you want to be profitable in the market. But if you really want to live from the market, you need to manage your risks as a professional. And I say this because one of the most important things I learned after years trading is that if you want to make money, the first point is you have to learn how to protect your money. In this week, I'll record a very unique video about risk management, completely different from what these fake traders tell you. In this video, I'll show you how to manage your risks professionally. And if you don't want to miss it, hit the subscribe below. For your attention, my sincerest thanks.